Hey guys, welcome back. Patrick here. In this video, let's talk about 3 SPACs that are about to fail miserably. 3 SPACs that, in my opinion, are disasters. You guys know there's been many of them in the past few months. Well, these ones are getting closer to the merger, and now that they're not going to have that $10 artificial floor, I feel like they're going to go under $10, and I'm betting against them. I bought put positions on some of them already, right, and I'm looking for more of them. So I hope you find this entertaining. Let's get started. Alright friends, sometimes you have to come to the realization that if you can't beat them, join them. Currently, SPACs are considered a toxic asset. No one really wants them, and the institutions have been dumping them massively. Even the $10 floor barely saves these companies, and as soon as the floor disappears, they start crashing under $10. So I'm going to show you the 3 that I'm betting against right now, and there's many more that are good candidates. But for now, let me just show you like why this strategy is probably going to work, right? A lot of the companies, even though they have pretty good potential, they're still going down under $10. So here's Microvast. You guys know they make batteries for electric vehicles, a very hot industry, right? We all think it's going to do well in the future, but as soon as the floor disappeared, look at how it crashed, right? To 853. So if you have puts on this company, like even $1.47 under $10 means really good profits. Play Studio is a company that I've been buying shares. I'm up to 2,000 shares already. Keep lowering my my cost basis, and I think this company is going to do great. Very good risk versus reward. And yet, look at this, from $10, I mean, it literally crashed. Now it's at $5.84. I mean, that is really ridiculous. Look at how it literally never has gone up after the merger, right? So if a company like this that already like as revenues, as products, and is making a little bit of profits, is tanking to $6, what's going to happen to some of the more speculative companies, right? Then you have Wheels Up Experience. This is a company that sadly I know someone that invested pretty heavily into it. Again, as soon as the $10 floor disappeared, the company has been in a downtrend. And one that recently, like just last week, actually voted on the merger and the floor disappeared. Now it's at 926, right? So it's not crashing to $5 or anything, but just the fact that it goes from $10 to 926 is going to be very profitable if you own put contracts. At number 3, we've got a space company, SRAC Momentus. This stock has been a disaster since the deal was announced, and let me tell you, there are so many problems with the company. It's all investors want to get out of the deal, right? It is that bad. They lost most of their pipe already. So this company, right, had a lot of interest in the beginning, but now it is stuck against $10. And let me tell you, after the merger, if the merger goes through, right, people still need to vote in favor of this merger. This stock is going under $10, almost guaranteed. So let me show you why, right? What are some of those problems? Well, it is a space infrastructure company that is very speculative in the first place, but we all agree probably, I think, that space is going to be a good industry in the future, right? They want to use their propulsion technology to bring satellites at the correct orbit. Nothing wrong with that. Right? The only big problem is that, well, first, they're not doing the launches themselves. So they kind of piggyback on SpaceX, which is the big dog in the industry. And then you have Rocket Lab that also does the exact same thing Momentus wants to do, except they already have experience doing it and they have the same technology, right? So why would anyone go with Momentus versus the other companies? So that's just the first part of it, right? The company is going to have its shareholder meeting on August 11th, so a little over a week from when I'm filming this. And the last day to redeem shares is on August 9th, right? So after August 9th, the $10 floor, it's gone. Currently, if you were to redeem your shares, you would get $10.03 approximately, which is probably why this is where the current share price is, right? You would have an arbitrage opportunity otherwise. But after that, once that floor is gone, people are going to be selling out of this stock if they're still in it, right? So let me show you a couple of the problems with it. So, when Stable Road announced the merger with Momentus in October 2020, the deal included a concurrent PIPE round. You know, they always have PIPE, and they had 172.5 million, right? Well, out of those 172.5 million, During this transaction, right, over the past couple of months, they lost 118 million of that from investors that actually got into an agreement to get out of the deal. Well, how did that happen? One of the big problems with this company is that the CEO and founder, like one of the most key person in the company, has Russian ties. Well, that caused a lot of problems with the US government, right? So the SEC settlement that gave PIPE investors an opportunity to drop out resulted from allegations that Momentus made false claims about the maturity of its technology, totally unproven, and national security issues about its Russian co-founder and former chief executive, Michael Kokorich, as well as the failure of Stable Road to do proper due diligence. All right, so in other words, they actually allowed the PIPE investors to take their money back and say, hey, this company is totally misrepresenting like the maturity of their technology. We don't even know if it's going to work, and we don't want to be a part of it. Plus, the actual US government gave a lot of issues to the company about actually giving them clearance to do their missions, right? So they were supposed to piggyback onto SpaceX's missions, and a couple of them were actually delayed, if not denied entirely, right? And that causes the company to have basically zero revenues for these this year. Potentially they would have revenues in next year with the current management. But you guys see that this is a very big issue with this company, right? All of the schedule, all of the projections that they had in the investor presentation, all of that is out the window. Look, the pro forma valuation that SRAC gave the company is $1.2 billion at $10 a share, right? So this was peak SPAC mania, SPAC craziness, and look at the actual projections for this company that are completely based on thin air, right? Completely taken out of a hat, and they just put this on a spreadsheet and said, hey, we're worth 1.2 billion. So 19 million revenue this year, we know it's probably going to be very close to zero. 152 next year, right? So all pretty much 10x. Then go up to 598, 1.2 billion, 1.9 billion, and then up to 2027, 4 billion companies. Does this look like a company that's about to generate 4 billion in revenues? Of course not, right? This was complete BS, right? And now this company is going to actually tank. But I have to give them credit. They are trying to recover. I would be not objective if I didn't point out that Michael Kokorich is no longer with the company. They have a new management, right? So John Searoot is the CEO, and they have a lot of new people that are going to be more credible and are going to try to salvage the company, right? And they might be successful in the future, but there's no way they can make significant inroads enough in the next 2 weeks, right? With the redemption on the 9th of August for them to save this company in the meantime. So this company is going to go under $10. If I have puts on this one, which I do, I already bought some, I'm going to do pretty well. If the company drops to $9, $8, I'm just going to sell them and cash out. At number 2, we've got a precious gem. We've got one of the worst deals I've ever seen in my 12 years of investing. We've got RTP that's going to be merging with Joby Aviation, the flying cars. I mean, this one, whoever brought this to the market should be ashamed of themselves, right? They take SPAC investors to be idiots, and sometimes I guess we are. But at this point, right, when you look at this company, it's a complete joke, right? So this was announced at peak SPAC mania, and the stock actually went up to $15. When you look into it, it's almost trash, right? So let me show you a little bit. So what they want to do is these flying vehicles are going to help people with short distance travel and avoid traffic. Again, the business model, like the idea behind it, is very interesting. Everyone knows how frustrating traffic can be, but it's when you look at the details of the deal that you're like, this is such BS. Like, who would ever invest in this? All right, so details are the company is going to have the shareholder meeting 2 days from now on August 5th. And the redemption is actually today. So you're going to expect that tomorrow we're going to see. Maybe I'm going to look like a genius by showing you this one. Or maybe it's going to go back to $12 and I will be completely wrong. I don't think so, though. So today was the last day. So tomorrow the floor is gone. People can actually sell, right? They won't be able to redeem for over $10. So what is problematic with this company? Well, they already tell you that the time is now. For what? For losing all of your money with investing in this one. Look at this, right? So in this presentation, they talk about literally everything. There's 113 pages. They even tell you about Tesla. I don't know exactly what Tesla has to do with them producing little helicopters, but apparently Tesla is very relevant. Right, so transaction details, valuation $4.6 billion. Would expect this is an important company, right? There's a lot of companies that are worth way less than that, even though they're very successful in the market. So if you look at this, 1.6 billion in pipe, that's a lot of pipe, right? They're going to be selling this stock pretty heavily. We all know that a lot of pipe means a lot of selling pressure usually. So with a company worth $4.6 billion, what kind of revenue do they have? Well, they kind of buried it at page 108 out of 113. 2021, no revenue, right? Just losses. 2022, no revenue. 2023, no revenue. And then miraculously in 2024, for your $4.6 billion, you are getting $131 top line revenue, not profits, right? So 2025, it would jump to 721, and then 2026 miraculously jump to 2 billion in revenues. Again, you guys can see why this is a disaster in the making. I understand like having a long-term horizon, wanting to be a long-term investor, but when you're looking at 5 years down the road, like before making any kind of money, that's just dead money. It's not a long-term investment. So that is number two. Sadly, I couldn't build a big position in this one. I tried, right? I really tried to buy into it, but sadly, I'm kind of running out of time. So I'll try again tomorrow, but I wasn't able to buy a lot of puts on this one. And last but not least, at number 3, we've got SAII. That's going to be merging with Autonomo. I actually did build a position in this one, and I do think it's going to go under $10. But let me be really upfront, I'm not going to make fun of it as much as I did with Joby and Momentus. Those companies are fundamentally flawed and are very, very ridiculous. This one, like, there's nothing absolutely wrong with the company. It's just that the company is a little bit overvalued, and based on what their revenues are and what their projections are and what they can really do with their data. All right, so let me be a little bit more serious about this one. Currently it's at $9.97, and what they want to do is aggregate data from cars and then sell that data to other companies that are going to be using them to build various models. So an example would be an insurance company that's going to use all of that aggregated data to adjust their premiums, right, and always be profitable. So that is a great idea, just like the other ones, except they haven't been able to really monetize that data quite yet. So this company's shareholder meeting is going to be on August 12th, so a little over a week from now, and the last day for redemptions is going to be 2 days before that, so on August 10th. Now, if you go on the website and you try to click on fact sheet to get like the quick info, you're not going to be able to because the website is broken. But if you've ever built websites, if you've ever developed a program, you know there's always different bugs, but it's not really putting your best foot forward. Otherwise, the website looks pretty good, but you know. So if you look at the slides though, you're going to see the way they presented it looks very impressive, right? And there's no doubt that a lot of people, when SPACs were really, really hot, a lot of people were looking at this and would have been very impressed. Think about it. They have an agreement with 16 different OEMs, meaning they're going to add more and more cars to their fleet that is collecting data, right? So they have 40 million plus connected cars, 4.3 billion data points per day. So it looks like they're making pretty good progress. Now, the big problem is when you look at the actual valuation, once again, 1.4 billion minus the money that they're going to have after the transaction, that leaves you with 1.1 billion valuation for this company, right? So, you know, again, with all of those cars that they have connected and with a valuation like this, you're thinking, well, this company must be generating some pretty good money, right? If they want us as investors. Well, with 40 million cars connected, they were only able to generate $400,000 in revenues in 2020, and their projections are in 2021, $3 million. So if you calculate not even the price to earnings ratio, just the price to sales ratio is astronomical. I mean, this company would need to have a proven track record, would need to have a proven like growth rate for you to pay this kind of like ridiculous valuation, and it just doesn't have it, right? So 2022 would be 24 million revenues, 98, and then of course like all the other ones after that they calculate exponential growth to 574 million plus, right? So this is a stock that I don't think is completely flawed. There is value in them collecting data and then reselling it, but at 997 it is going to go down almost guaranteed because it's just not worth that much, right? So I have puts on this one, and hopefully I'm going to be cashing out in the next week or two. And there are many other companies out there that are in that situation right now. They're going to be merging soon. They were announced at peak SPAC mania. They're completely overpriced, right? There's a lot of eVTOLs that are coming that I'm going to be betting against, and I'll let you guys know how this strategy works in the next few weeks. All right, so I hope you enjoyed it. I hope you found a little humor in it, and I'll see you guys in the next video.